Now that you have a better grasp on some of the key phrases you'll read on a research note, let's focus on how do you actually pick a fund. With more than 4,000 funds and investment trusts available in the UK, this could be a daunting task. But that's where FundCalibre comes in. We do a lot of the hard work for you, seeking out excellence and whittling down funds to a more manageable number. So, where do you start? Commonly, funds are organized by sector. The aim is to help investors navigate more easily around the thousands of options that are available by grouping together those with similar objectives. Most are defined on an asset type basis, such as equities, fixed income, or property. They are then broken down further to help make better like-for-like comparisons. For example, investors wanting exposure to smaller companies can find sectors devoted to businesses of this size in the likes of UK, Japan, Europe, and North America. There are even sectors for funds and trusts that have a more unique focus, such as commodities, healthcare, and infrastructure. Okay, so now let's consider you're invested in a global equity fund with a growth strategy. There is, of course, plenty of information available out there on the internet, but that could take months going through pages and pages of results and documents to try and find something that you're actually interested in, and more importantly, something that you're confident in putting your money behind. You'll need to find out the fund's stated aims to ensure its objectives remain consistent with your overall investment goals, and it's crucial to understand exactly what the manager is buying, as marketing teams can come up with many weird and wonderful ways to describe a portfolio. While doing your research, one important piece of information you'll want to consider is the fund manager's track record. Before investing any money, you need to be confident your chosen fund manager can achieve decent returns. There's no point buying a fund based on its fantastic 10-year track record if the current manager has only been in place for a few months. While it's a common mantra that past performance is no guarantee of future success, it can indicate whether they can deliver the goods, so to speak. Also, while short-term underperformance can be a red flag and used to highlight that something needs investigating, it shouldn't be the sole driver of your decision. There are plenty of reasons why a fund may have underperformed. For example, the manager may have picked the wrong stock, taken on too much, or just lacked experience in operating in certain markets. Sometimes it's down to the fund's objective not suiting the economic backdrop. For example, funds buying young, exciting stocks may not do well when the stock market shuns growth names. Economic problems in certain parts of the world and political instability can also affect performance. Remember when I mentioned systematic and country risk? They could also play a part here.